screener slide-টা নিয়ে এসো ইয়াসির। Are we live, Riyadh?
Yes, sir.
Acha. Good evening, ladies and gentlemen, and Assalamu alaikum from Dhaka, Bangladesh. My name is Salim Hussain. I am the Managing Director of Brac Bank, and I am pleased to welcome you to the third quarter earnings disclosure program for Brac Bank Limited. We have a little over 2 hours scheduled for this particular program, and let me start off by introducing some of my colleagues who are here with us. We have the 3 Deputy Managing Directors from Brac Bank, our Chief Financial Officer, Mr. Masood Rana, who is also, Shabbir Hussain, our Chief Operating Officer, Tariq Rifatullah Khan, our Head of the Corporate Banking Division. Then we have our business heads, Syed Abdul Momen Tomal, who's Head of SME, Mr. Maihul Islam, who is Head of Retail Banking. We have our Head of Credit Risk Management, Mr. Ahmed Rashid Joy. We have Najmur Rahim, who is Head of our Alternate Banking Channels. And we also have Mr. Yasir Arafin, who many of you may have interacted with or corresponded with. Yasir is Head of our Business Finance team. That essentially is the Brac Bank team. And I'm also pleased to welcome to today's program Mr. Kamal Kader, the CEO of bKash, and also Mr. Moin, who is the CFO of bKash. So without further ado, let us start. Yasir? Yeah, standard opening statements and disclaimers. Let's go to the third slide, and quickly I will take you through the agenda. Yes, so essentially we have 2 hours, but if there are questions which will continue further, we're happy to continue beyond that time as well. We'll start off with a quick economic and market update, and then we'll get into the 3 client segments, SME, retail, corporate, talk a little bit about our balance sheet, portfolio mix, the spreads, etc. Spend a little time talking about treasury and financial institutions. Obviously, many of you are interested in risk management. Then we dive into the alternate banking and digital channels that we have with the various initiatives. We'll talk about the actual financial performance. And of course, in between, we will also give an opportunity for you to listen to Kamal Kader, the CEO of bKash. And I'm sure all of you are very interested to listen to Kamal. Shall we move into the next slide, please? We'll start off by giving you a sense of where Bangladesh is in terms of the pandemic itself. And that bottom line really says it all. Infection rates are pretty much down, as you can see from the left-hand side graph. Medical treatment has improved dramatically, as a result of which fatalities are now relatively quite low, and basically overall psychology, the fear factor itself has sort of evaporated, and activities have normalized across society, across the economy. There are very few sectors that have not now returned to normalcy. Perhaps to an extent retail outlets, but everything else, restaurants, hotels, resorts, even flights within the country, transport, everything has normalized pretty quickly. Next slide. We'll ask Shaheen, our Treasury Head, to take us through some of these economic metrics.
Okay. Thank you, Salim bhai. I think the country has really done fantastically well in terms of recovery from the pandemic. Like in the early part of the pandemic, like March, mostly April, May, and June, there was a dip in terms of export, remittance, and all the segment. And from June onward, we have seen significant improvement. Like on the export side, we have surpassed in first quarter of this financial year, like in July, August, September, by 2.58%. Achieving last year's number was really challenging, so I think it was a success. And on the remittance side, this is the biggest success, if I can say. Like we grew our remittance by 43% for the first 4 months of this financial year, July to October. So this has really built up a well cushion in terms of FX reserve. Reserve has now crossed 40 billion. In fact, it is now 41 billion. So this reserve accumulation has really created a good cushion for us. At the same time, it has injected a lot of liquidity in the system as well. We'll discuss it later. Let's move to the next slide, please. In the, on economic growth, Bangladesh has achieved 5.24% GDP growth in last financial year, which concluded in June 30th, 2020. And our projection for the next year is 8.2, while various multilaterals also forecasted various figures, like ADB has forecasted 6.8% growth next financial year, means current financial year, which is going to conclude on next June. IMF has projected in calendar year, like calendar year 2020 at 3.8, 2021 4.4, and then again 22 very sharp recovery. World Bank, though, forecasted a little lower growth, like financial year 2020 2%, 21 1.6, 22 3.4%. But I think we would definitely be able to grow much faster than what World Bank had projected, and also like what IMF has projected, mainly because all the activities is now running in full swing, and we are on a faster recovery phase. So I think we could achieve a good number in the next financial year as well. Let's move to the next slide.
General consensus is pretty much that about how much the growth will be, but whether it will be positive or negative is not really in question at all.
Right. I think we're going to see a growth number, positive growth number. Yeah, these are some clips of newspapers. Let's move to the next slide. So in summary, we can see like economy growth is positive despite pandemic, and we are seeing faster recovery. Balance of payment favorable. Lower oil price and cotton price also helping our recovery faster. So, and also like good monetary and fiscal stimulus from the very beginning. Like central bank started with the stimulus from the early April. So that has really boosted and provided much needed support. And as we have good space in terms of both monetary and fiscal side, so I think we have a good scope to really provide sufficient support for the economic recovery. I think if going forward, if we need any support as well, I think we are really in a good position compared to many of our comparable countries. In terms of market, because of expansionary monetary policy, and this is for the first time, central bank really indicated very strong measures like cutting CRR aggressively, cutting repo rate aggressively, and all these measures has really created, and also because of buying significant amount of foreign currency from the market, that has injected a lot of liquidity in the system. So in general, liquidity is ample, and the kind of, as I mentioned, like the kind of monetary space that we have, say at the end of December, our deposit rate was 8.5%. Now deposit rate is 4%. So you can see the kind of monetary space has been created for supporting the economic recovery for businesses. So this is unprecedented. I think this support will continue from until next year as well. So this all together will definitely support us to grow faster, and this will again support quick recovery going forward as well. On the government security side, because of this excess liquidity and the central bank measures, yield has collapsed significantly, and because of higher demand as well, yield has come down significantly, and we expect the yield to be at a lower level going forward as well. And the central bank also extended moratorium period until December. This has also supported the business and businesses. I think we are from this last quarter. I think we are seeing some repayment happening. I think we will be seeing good recovery by the end of this year. I think this is the end from my side.
We'll talk a little bit more about that once we get into the individual businesses and when we hear more from our head of credit risk management, Ahmed Joy, as well. Thank you very much, Shaheen. Shall we move on to one of our important customer segments? And I will welcome Syed Abdul Momen, who is better known by his nickname Tomal, to talk to us about how the SME business has been coming along over the last 9 months.
Thank you, Salim Bhai. The SME business, since the beginning of the pandemic, as we have said earlier, that we have first done a survey to initially, when the lockdown started, to find out how our customers are doing. So, and we have actually continued this survey every month to understand the changes. So our last survey was done in August, and here we are presenting a comparison of, and this will show you the trend how SME business are in the right path or in the recovery path. So if we see that almost 98.5% of the SMEs are now open, which were pretty low when it first started. Only 33% businesses were open. And if we look at the sales percentage, we see that almost 68% have recovered up to August. And our projection is by October, 90% plus will be recovered. And actually, it has happened. It has happened actually more than our projections. So, and also in terms of employee presence at the SMEs, that has also picked up. Like it was only 41% employees were present. Now it's almost 80%. Now, if you look at the cash flow status, that has also significantly improved. Almost 80% of SMEs have collected their receivables, which clearly shows that the supply chain have revived and things are coming back on track. Next slide, please. And if you look at our business numbers quarter by quarter, you can clearly see how the survey results has reflected our business numbers also. Like if you see in Q2, everything were like during the lockdown, but our numbers have significantly jumped up. And as usual, in terms of loan disbursement, the small business segment, which is our core competency, they are leading. And we have done almost like 22,732 loans only in Q3, which was only 3,000 in Q2. And if you see the segment-wise graphs, then you will notice that it has been driven especially by the small business. Now let us look at the deposits. The deposits have also grown pretty significantly, and if you see the number of accounts that we have opened, it is quite high in Q3, and this is also driven mainly by the small business, and also branch have contributed significantly. So, so on the deposit side also, we are. It shows that the businesses have revived and things are coming back on track. Next slide, please. So if you see, in terms of customers, in Q3, we have, in our book, there are 6,000 new customers, which is 10 times more than Q2. And also now the total customer number stands at almost 311,000. And assets, we have disbursed 22,732 loans, which is 7 times more than Q2. And the assets growth volume is also more than 1,000 crore. We have done only 200 crore, which is 5 times more than Q2. A total asset portfolio have also grown by 21% compared to Q3 19. And we have also really pumped up our disbursement from the government stimulus package, and so far we have disbursed almost more than 700 crore, but in Q3 we have disbursed 300 crore. Deposits, you have seen, has significantly grown in previous graphs. You have seen that. But the most interesting bit of SME deposit growth is the growth in CASA. Like if you see our deposits grown by 575 crore, and almost 90% of that is CASA. And this is the highest SME CASA growth recorded ever. And the CASA portion, if we compare between Q2 and Q3, this has resulted in a very high percentage or betterment. Like if you see in Q2, our CASA percentage in the total deposit portfolio was only 57%, which has now moved to 62%. Trade business is the only business where we generate non-funded income. So the trade volumes have also grown 28% more in Q3 than Q2. And also commission earnings have improved by 40%. Next slide, please. Now, if you look at the portfolio quality, almost 76% of our customers were still under moratorium, and 30% customers, this is a very exciting news, that 30% customers who were under moratorium paid around 2,112 crore taka in Q3. So this proves that though the customers are under moratorium, but as you have seen, the businesses have revived, so they have started paying. But if you look at the PAR and NPL percent, obviously it remains the same because of the moratorium. But we are pretty confident that once the moratorium is lifted off, because as the business have revived, our collections won't be hampered that much. So in terms of products, we have heavily focused on IT and IT driven businesses, and we have joined hands with Basis and launched a new product customized for the IT industry. And another major thing that is our core focus now after the rate cap is the cost income ratio. And we have taken various measures earlier, which we have told you in earlier earning disclosures, and those measures have started producing results. So we have started reimbursing the actual cost from the customers as per the definition of the regulators. And also we have merged a couple of unit offices for better synergy, and which will produce annual saving of 1.68 crore taka. And incremental NFI of BDT 1 crore has come because of the new asset and liability schedule. And also cost income ratio, we have successfully reduced by 21% in Q3 compared to Q2. And also regulators have been there by our businesses, and they have extended the loan moratorium up to December 20. But we think that as businesses are reviving, the SMEs, a good number of SMEs will come out of moratorium during the last quarter of this year. Next slide, please. Now, if you look at our priorities in Q4, we will continue our growth momentum, focusing especially on small business and on the deposit side. We will venture into new customer segments through customized products and partnerships. And in terms of assets, we want to substantially grow the small business assets. As you have seen, the businesses have resumed. And the productivity side, our focus will continue, and we have done all these business numbers which you have seen so far. We have done it without any additional headcount since June. So, and that has positively impacted our cost income ratio. We have also working a lot more. We have taken various initiatives to digitize our lending operation, and some of these small initiatives are already live. And by Q1 21, we are expecting a lot more initiatives to go live, which will have an impact on our staff efficiency and cost. We have rolled out scorecards for automated credit decisioning. We have also exploring some lending partnership opportunities with fintech and e-commerce and telecommunication platforms. And we expect some of these to go live in Q4 also. So in terms of deposits, yes, you have seen that we have grown quite significantly starting from quarter 2, and quarter 3 was amazing. And also we will continue that, and we will keep our focus on improving the CASA mix further. And the trade business, obviously, this is the only source of fee income, so we will accelerate in our trade business also. Next slide. Next slide, please. Portfolio quality, as I was saying, that as the businesses have resumed, so we expect almost 70% of our customers will come out of moratorium, and we have enhanced or strengthened our relationship with the customers, and as you see, like from the very beginning of the pandemic, we have actually strengthened our and by relationship strengthening, I mean, like earlier, if you would have visited a customer once, now we visit twice or thrice, and by doing so, this will help us to bring more customers out of moratorium. And our recovery team has been strengthened so that if there are any deterioration in the portfolio, we expect our strengthened recovery team will be able to handle that. And in terms of product, yes, we will carry on our focus in doing more and more IT based industries, because this is something new. This is a new segment for us. And we will also launch new asset and liability products for the women entrepreneurs. This is also, which is better known as our Tara product under Tara umbrella. And we want to significantly grow there also. In terms of cost income ratio, we will further reduce cost income ratio. All our endeavors will continue, and and as they flourish, the cost income ratio will keep on reducing further. And our target is to reach pre-rate cap cost income ratio by Q4 21 at 9% interest rate. And regulator support, we are expecting that the credit guarantee scheme, especially for collateral-free cottage, micro, small customers, will be live in Q4. So that is our expectation. So that's all from SME side, Salim bhai.
Thanks very much, Tomal. Just to recap, this business has started growing very well again. Acceleration in both the asset and the deposit campaigns. July, August, September were great months, October, November as well. So that momentum will continue right through to the end of the year and going forward as well. Thanks again, Tomal. Let's listen to Mahiul Islam talk about our retail business.
Thank you, Salim bhai. Good evening, everyone. I will share the retail banking updates. We had a good growth momentum in third quarter of this year. Yasir, if you go to the next slide. Our retail customers grew by 25% year on year, acquiring 69,000 new to bank customers during this year. Our core focus continued maximizing on retail deposits, where we have grown by 15% year on year and 10% year to date, despite the COVID challenges, with a healthy CASA mix of 67%. We have significantly reduced our retail cost of deposits by 152 bips compared to full year 19. And we are driving various projects such as eKYC, which is also directed by Bangladesh Bank, business process re-engineering with Deloitte, a consultant, to optimize and digitalize our existing processes. Due to COVID-19 situation, we have been conservative in growing our retail loans book, which grew only by 4% year on year, as we had slowed down our assets momentum during second quarter of this year. However, from October, we had started focusing on retail loans and expect the momentum to build in quarter 4 this year. In terms of credit cards, the book grew 18% year on year, and the good sign is we have started to observe card spends picking up, especially in the third quarter. As far as our retail loans portfolio, that got impacted in COVID-19. And if you look at, if you go to the next slide, yes, sir. In terms of portfolio quality, The PAR increased to 5.6% compared to 4.4% of last year. However, the NPL got reduced to 1.8%, so we have managed to keep the NPL at a lower level. Here we have observed positive repayment signs from retail loan customers from October onwards, and only 5% opted for moratorium during the third phase of the government circular. So we expect that when we have also done surveys for retail loan and credit card customers, we have observed that the retail customers are now more concentrated on the repayments rather than continuing on the moratorium. So that's the trend that we have observed for the retail loan portfolio. In terms of acquiring business and partnerships, we had been active during this year and signed around 1,000 new merchants as well as deployed 1,400 new terminals. I am happy to share with you that we have regained our merchant acquiring business momentum, and recently for October we have achieved the highest acquiring volume growth of 299 crores in October. So the spends and the overall momentum of the growth has been picking up. We also had an excellent growth of 51% year-on-year in remittance transactions, which resulted in our NFI income growth of 39%. If you move to next slide. In terms of new acquisitions for retail loans, similar to SME as Tomal was mentioning, as I mentioned earlier, in terms of retail deposits, yes, we have surpassed our Q1 20 figures and booked total 45,718 deposit accounts, and it was very good deposits across all the products compared to the sharp decline that we had seen in Q2. Now, if you move to the next slide, which is in terms of new acquisition for retail loans, as I had mentioned earlier, we have been conservative and remained watchful during Q2 and Q3 of 2020. From October only, we have started to focus on retail loan products. Credit card new monthly acquisitions have increased already to 3,000 level in Q3, and we expect to go further. So overall, it was a good third quarter for retail banking in terms of customer acquisition, deposit and credit card balance growth, as well as high remittance volumes. Looking forward, now if we come to Q4 priorities for retail, it will be to continue to focus on deposit drive through CASA, revamp our employee banking to capture market share jointly with our corporate banking team, in line with our strategy to grow this chosen segment for sustainable low-cost CASA, as well as also we will focus on cross-selling credit cards and personal loan for this employee banking segment. For our frontline staff, we will be launching a sales app called Obichol in November to reduce the new acquisition turnaround times as well as for effective application tracking. We will continue to focus on collections and recovery of our loans with enhanced teams of retail and branch sales and the new changed process. So that's all from retail banking side. Thank you.
Thanks very much, Mahi. So essentially, the last 9 months have been very good in terms of the deposit mobilization for retail banking, and very naturally from April onwards, we were very conservative with regard to asset growth. Those shackles have just been taken off, as Mahi was telling you, and from October onwards, particularly from the second half of October onwards, retail asset growth has begun. And by the end of the year, we hope to achieve the kind of momentum we had in December last year, January and February of this year too. Thanks very much again, Mahi. If we can move on to the corporate banking team, and Tariq Rifatullah, our new Deputy Managing Director and Head of Corporate Banking Division, will take over now.
Thank you, Salim Bhai. Good evening, viewers. Assalamu alaikum. Before going into business performance and figures, I should briefly narrate few matters which will help to understand the overall aspect of corporate banking business. Corporate banking division started financial year 2020 with a positive business outlook. Overall portfolio performance and profitability has grown steadily till first quarter, March 2020. Bangladesh then entered into countrywide lockdown in April 2020, which extended till end of May. Due to pandemic situations, offices and factories were totally closed. To note, 95% of our corporate banking portfolio is directly or indirectly manufacturing based. As manufacturing activities were totally closed in April and May due to pandemic, the overall impact on profitability and business outlook have been severe. We have analyzed the overall situation well and developed various measures to analyze and customers month-to-month sales of our customers with the same period of 2019. Sales figures of April and May 2020 compared with the same months of 2019 showed declination of approximately 80% level. However, we have observed light at the end of the tunnel as business has shown rebounding trend since June 2020. In last 3 months, we have observed that sales of our customers are either surpassing the sales figures of the same month of previous year or within 5 to 10% variance. Still, overall revenue of the customers decreased by 15 to 20% year on year. Our customers have shown positive intent and resilience to overcome the overall severity of the pandemic's impact. In line, we have also extended our wholehearted support to be at the forefront of our customers to assist them in all feasible way to cope up better. Few of our initiatives successfully roll out all government declared stimulus packages to our customers, loan tenure extension as per Bangladesh Bank decision from time to time to provide flexible and cushion to customers' cash flow and repayment, etc. We have observed that majority of our customers, including our top 20 customers, have been able to cope up with the stress situation well to continue their businesses. Repayment has been regular and no significant overdue has been observed except a few cases. However, the customers which were facing tough time during pre-COVID situation scenario, in first quarter of 2020 for various reasons, have been tremendously stressed in post-COVID situation as well. We assume that business challenges have mounted in the pandemic time, which has stressed their cash flow as well as overall business further. We should mention that a commendable percentage of our corporate banking portfolio is under RMG, textile, and backward linkage industry. Overall performance of the industries are heavily linked with their buyers as well as buyers' countries' overall situation. As we have seen since lockdown, days in developed countries, US and particularly in EU, export order flow have reduced significantly for obvious reason. Post-lockdown, this has been improving, which is quite evident. However, if EU and USA enters into all-out lockdown again, which is highly probable due to second wave of the pandemic, this industry and related customers will be deeply impacted in the shorter and longer term. This is a very crucial factor overall sustainability of the RMG, textile and backward linkage industry. But as a responsible and prudent bank, our strategy is to provide financial services and require support to our customers so that they can cope up better and can perform sustainable businesses. We'll continue a strong relationship management, regular monitoring and advice to our customers for their betterment. This will provide us better visibility and control over their businesses, which is also aligned with our vision to become the best corporate banking partner for our customers. Now let me elaborate major aspects of corporate banking businesses. I will start with deposit, obviously. We have continued our focus to provide customer solutions which resulted into significant growth in deposit. We have achieved 10% growth in year on year, which is mostly contributed from CASA, current and savings account. Our CASA has grown significantly at around 54.9% year on year, which has also helped us to improve our CASA TD ratio. That is currently at 56.44, which was previously 36.64. TD portion was much larger in the last year. So the improvement is quite significant. This has positive impact on our minimizing cost of deposit by further 215 bips. Currently, we have one of the lowest cost of deposit in terms of local banking industry, particularly in the corporate banking segment. Key differentiating factors for such improvement are our capability to offer customized and cost-effective solutions. Current corporate deposit is among one of the highest in banking sector, and we aim to continue our effort for the rest of the year with target of adding many new transactional accounts particularly in public segments, MNCs, development organizations, and institutions, initial corporate accounts. Cash management and transaction banking are our key focus areas, as our strategy is to be the best transaction banking partner for our customers. To achieve that, we have adopted customized and solution-driven approach to provide comprehensive product suites, particularly in payment, collection, payroll, etc. We have continued our focus on digitalizations, which is delivering results actually. Some of the digital initiatives are expanding our digital payment solutions, that is our own homegrown software that is partnered to wide number of customers, online duty and VAT payment integration, salary payment capabilities, including corporate solutions, etc. We are continuously striving to develop new products to strengthen our footing in transaction banking arena. Having said that, we have developed and rolled out new product already in this year. In terms of loan portfolio, the loan portfolio on the other hand, degrew in line with our risk appetite. Degrowth is observed mainly under OBU book, which is due to overall economic situations. Main factors behind this degrowth are particularly negative import growth, trade discounting substituted by corresponding banks, available low-cost refinancing facility, particularly from Bangladesh bank side like EDF, GTF, LTFF, and other products. Direct lending from the DFI and EK different development partners. However, considering liquidity in the market and lower OBU fund cost, we are focusing on OBU growth in the coming periods. I should mention that we have been able to reduce exposure in stressed accounts, and also one of our transactions were adjusted in this period. New accounts onboarding remains slow because of the industry, and however, we have emphasized on portfolio quality to reduce cost and vulnerability. 94% of our corporate loan portfolio is rated by external credit rating agencies, having positive impact on our CAR. We have completed takeover deal executed for one of the stressed companies, which was particularly in a non-performing arena previously, and could have been gone to write-off situations. We have also introduced quarterly account review with DP analysis and review of account strategy to strengthen our monitoring system. Yasir, could you please go to the next slide, please? Now I will elaborate our priorities for upcoming periods. The last slide, please. On deposit side, our strong focus will continue to strengthen our transactional banking peripherals. Also, we will continue a strong persuasion to minimize our cost of deposit further. We will enhance our initiative to transform account activities more into digital platform to enhance efficiency. For loans and advance, we will focus on exploring potential areas such as project financing opportunities and government stimulus packages, and also public segment. Our key strategy will be to grow portfolio with our customers which have proven track records. Also, we will extend our wholehearted support to provide moratorium and restructuring of limits and outstanding to stress accounts which are circumstantial due to pandemic situation. We will continue strong persuasion of growing our OBU portfolio and trade-based solutions to enhance our NFI businesses in the coming 2-3 months as well. Portfolio management remains our key focus areas for us. We are closely monitoring our customers' businesses performance and extending necessary support as and where required. For upcoming period, our priorities will be monitoring performances indicators such as sales, stocks, and receivables collections, and bank liabilities positions, etc. At least quarterly, if not monthly. We'll also review accounts under stress situation, revisit account strategy quarterly. We'll monitor business performance, review sector-wise portfolio, and extend necessary support to our customers whose business have been adversely affected by the pandemic. Let us remain optimistic and that impact of pandemic on business will slow down over time and economy will rebound strongly. We look forward to better and brighter future and intend to be prepared for any future adversity to remain sustainable. Let us all embrace the challenges and look forward to prosper. Thank you so much, Salim Bhai and others.
Thanks very much, Tariq Rifatullah, for giving us a sense of what the corporate banking division has been doing over the last 9 months in particularly stressed environments. Shall we move on? Yes. So what we'll do now is give you a few slides on our which will reflect how the loans and deposits have grown over the last 9 months compared to yesteryears. Next slide, please. And the first one is about customer deposits. You'll see 18, 19, and 20 third quarter figures here. 20 shows a 15% growth over last year. Deposits have been a very significant success story for Brac Bank over the last 9 months. Our strategy has been, of course, to grow in the right areas, which is in turn growing CASA. That's obviously been our number one strategy, but that is also supported by a focus mainly on retail, where the client relationships offer us both the ability to cross-sell other loan products such as credit cards and personal loans and car loans and home loans, things like that, but also because that client segment is less interest rate sensitive compared to larger corporate and commercial businesses. If you look at the corporate and commercial business, there, while the growth year on year has been only 5%, you may recall Tarek Rifatullah telling you about how that mix has shifted very, very significantly away from high cost term deposits and high cost short-term deposits towards more transactional business, as a result of which the cost of fund for their deposit base has dropped very, very significantly. And at close to $1 billion, the corporate banking deposit portfolio is amongst the largest in the country as well. Another big success story, particularly over the last 3 or 4 months, since July onwards, has been the growth in SME. That has, you can see, is a whopping 32% year on year and reflects that the change in KPIs, new product design, new incentive schemes, that is working quite brilliantly, with anything between $12 to $15 million of current accounts, transactional business being added on to our portfolio every month. So deposits, although driven by retail, are aligned with our overall strategy, and as I'll show you a little later, are bringing us very, very good dividends in terms of the overall interest rate spread as well. Next slide, Yasir. If you look at loans, relatively subdued 6% growth over last year, and that is pretty natural since April, May, June, July were all very, very slow months, particularly for the corporate banking, retail banking business. As I said earlier, SME, the cottage micro small portion particularly started accelerating from July onwards, and that is growing very nicely. We've also opened up retail from the month of October, but we are still relatively very selective with our corporate banking asset growth. Overall, relatively subdued asset growth, but you can understand why we were very, very selective, very conservative in this area. I think in the current environment, that is only to be expected. Thank you, Yasir. Next slide. Next slide, Yasir. Thanks. To give you a sense of what the loans and deposit mix is, and you can see how over the years it's already improved to 47% cottage micro small, 18% retail, and 35% SME. Our plan is to increase SME hopefully to 50%, and perhaps retail will also grow to 20-21% over the next couple of years. The focus obviously for corporate is to grow the transactional business and continue to de-risk the corporate banking or wholesale banking asset base as much as possible. Shall we move on, Yasir? In terms of deposits, again, you'll see I spoke to you about what our plan is, and you can see how it's moved more towards retail, and SME also has increased over the last few years. The great thing about that golden piece, which is all retail, is all corporate or wholesale, that is all transactional business and heavily current account based. Next slide. And this you'll see is reflected in this slide where you can see that our CASA has now improved to 50%. That is a significant improvement from the year end last year. I think we started the year, Yasir, if I remember, at about 41%. So you can see a 8-9% improvement in CASA over a 9-month period is a pretty significant achievement. And we expect this to only grow as all three client segments focus on CASA and as our new channels, particularly the agent banking channel, starts developing more. Next slide. And this is where we show you the yield on assets. That's the top line there, the blue line. The bottom red line is our cost of deposits across the bank, and the spread is the green line over there. And you can see that the spread is about 4.12%. And while that is a lot lower to what we started off the year at, last year averaged at 6%, we expect that despite the interest rate cap on lending products, we will edge closer to 5% by the time we end this year. And then that improvement in our spread will be driven by both our cost of fund further coming down, and also I think what you will see is the top line, the yield on assets, also start to improve as our retail and cottage micro small businesses start accelerating their asset growth too. Thank you. And this is essentially giving you a sense of where our loan to deposit ratio is. We call it the asset deposit ratio. As you can see, it's very comfortable. We're at 78%. This compares, Shaheen, to our prescribed, I think 87%, right?
87.5.
87%. They went well within all thresholds, not just this, but every other statutory threshold with regard to liquidity is very, very comfortably achieved. Next slide. We ask our treasurer, Shaheen Iqbal, to tell us about how the treasury business has come along over the last 8 or 9 months.
Yeah, next slide, please. Yes, sir. I think every market movement gives us some opportunity, and you really have to take that opportunity. For Treasury, this was a wonderful opportunity, and Treasury really grabbed that opportunity. This is easily the best year for Treasury business, and we really showed that one. Like we made very well in terms of all our business segment, in terms of trading, in terms of fixed income, in terms of money market, and all the products that we have, we really outperform the market, and we are easily the leader in the treasury business market. And this really shows that the kind of grabbing that we have over the market. So in general, I can say this is the best that we have done so far, and we hope to continue this performance going forward as well. I think that's in a nutshell from my side.
Thanks very much, Shaheen. Obviously, there will be some questions in this regard when we'll come back to you later on. Let's listen to Ahmed Rashid Joy, as he's better known. Joy will talk to us about another area I'm sure all of you are very interested in, risk management, particularly credit risk management.
Thank you. Good evening, everyone. Payment Bangladesh. And given this scenario, our Q3 NPL was 3.20%. Now, practically, we do not have much option in classifying assets beyond local regulations. Situation in mind, as you all that while maintaining loan loss provisions, we are almost 90% aligned with the internationally accepted 90 DPD approach, 90 days past due approach. So we provided around BDT 2.26 billion as loan loss provisions in Q3, and for this our ratio has improved to 151% in Q3 compared to 123% in Q2. On 90 DPD basis, this is 90%, as I said earlier. And given this loan loss provision amount in Q3, our credit cost has increased to 114 bips, which is 1.5 times higher than the last 4 years average of 78 bips. I think my network is in, I have problem with my network, but I'm continuing.
May I request you, Joy, to turn off your video? That will give you more bandwidth.
Sure. So could you hear me anything what I said earlier?
It's better now.
Okay. So what I said earlier is that while mentioning loan loss provisions, we were almost 90% aligned with the 90 DPD approach, and we provided around 2.26 billion as loan loss provision in Q3. And for this, our credit coverage ratio has improved to 151% compared to 123% in Q2. And on 90 DPD basis, this is 90%, as I said earlier. Given this loan loss provisions amount in Q3, our credit cost has increased to 114 bips, which is 1.5 times higher than the last 4 years average of 78 bips. So you will now understand the magnitude of loan loss provisions that we maintained. Now, since majority of our retail and SME borrowers voluntarily opted to discontinue moratorium in the last quarter, we have significantly enhanced our monitoring and collections effort during this time. And this is very important, what we understand. And we will continue to monitor big corporate accounts on quarterly basis with their sales, inventory, receivables, collection, and bank liability position, which Tarek already said. The ongoing prudential moratorium in Bangladesh is expected to end on December, so far we know. And our primary focus is to strengthen bank-wide monitoring and collection system, just to encounter the post-moratorium scenario. And we understand that this is very important, along with keeping loan loss provision in a prudent manner that we provided already. Next slide, Yasir. This is our asset quality on 30 days portfolio at risk basis. In last quarter, it was 5.3% for Brac Bank. SME is 3.2, 5.6, and corporate was 7.9. So this is on 30 days past due basis. Next slide, Yasir. This is the NPL slide that, as I said, we follow the prudential definitions. We do not have much liberty to go beyond this. So our Brac Bank's NPL ratio was 3.2% in Q3. SME's one was 2.2, retail 1.86, and corporate 5.3. So that's all from my side, Salim Bhai. Thank you.
Thanks very much. And of course, we'll come back to this later on. I'm sure there'll be questions. Thank you, Joy. Shall we move quickly to Najmur Rahim, who will tell us about a very important part of our bank, our efforts to migrate towards what we call alternate banking channels from historic or traditional bricks and mortar. Najmur Rahim. Najmur Rahim?
Unmute, Nazmur, unmute.
Oh, I'm sorry. Thank you, Salim Bhai. Good evening, everybody. Our alternate banking channels, comprising of ATM, CDM, call center, agent banking, and internet banking channels, continued to grow more in the last quarter. Though we have observed slowness in April and May due to pandemic, the numbers started rebounding from June. Average customer calls at call center went up to 200,000 per month. On a positive note, we have migrated nearly 40,000 subscribers into internet banking who were using traditional branch channels. Interestingly, we have seen financial transactions worth over BDT 600 crore in the month of September for internet banking. On a physical side, we increased 26 agent outlets by penetrating more in the rural areas. As part of usage optimization, we have replaced ATMs for low usage places to some more demandable areas, and this is a part of regular exercise to optimize our ATM usage and enhance our productivity and ensure sustainability in this area. Next slide, please. In agent banking, we have opened 16,000 customers, mainly in retail and SME segments. And during this quarter, we grew our deposit book 3 times of what we achieved in the last 18 months. On the asset side, worth of 235 crore taka has been disbursed as SME loan in this quarter. Remittance showed good numbers by opening up new exchange houses through this channel. And more importantly, we have observed a significant business in the corporate distributor bill collections to cater our corporate segment customers. In the rest of the year, our priority is to open the basic services to our existing branch customers so that they can use our agent banking channels through their accounts. We shall also expand the corporate distributor bill collection to cater the corporate segments widely. Next slide, please. Optimizing ATM and CDM locations will be an ongoing activity, as I told you earlier. We'll integrate with another card payment scheme apart from Visa and MasterCard in the ATM channel. We have opened a call center accessible to agent banking channel customers as well as to the agents, and have introduced more services like certificate statement delivery using our call center to divert branch from branch to alternate channels. We have opened internet banking facility to our solo credit card holders so that credit card holders can view their credit card details and download last 6 months statements and make different transactions through this. We also opened international SMS facility to cater our NRB customers and made enhancement in some internet banking security features to build customers' confidence on this channel. To summarize, alternate banking channel is an instrumental channel to keep the bank alive through providing the basic services to the customers. We believe that the customers of all segments will divert from traditional branch channels to this low cost and convenient channel. And through this, our alternate channels will be an integral part to achieve our bank's overall strategies. Thank you.
Salma, should we move on?
Yes, next slide.
Sabir bhai, please continue.
Yeah, thank you, Yasir. Good evening, everybody. I'm going. Yeah, next slide, please, Yasir. Next slide, please, Yasir. Yeah, next slide. Next slide. I'll wait for the slide, Yasir.
Sabir, just a second.
Please bear with us. We have a slight technology glitch, bandwidth issues.
Yeah, here you go. Thank you, Yasir. Yeah, I'll give you a glimpse on our digital initiatives, especially at this part of the year when we have pandemic situations everywhere, but our key projects are on track, thankfully. Not without hardships or difficulties. We are putting in extra effort to deliver as promised. A number of projects also were completed during this period. As far as digital initiative on activations are concerned, we are really capitalizing on the customer drive at this point in time. They also want it. So there is a demand, and at the same time, we also have our bandwidth to spend on that leg. Not only from call center, from branches, from sales, from all channels, we are actually engaging with the customer to deliver on all the values that we have to deliver from digitalization point of view. It's on internet banking, it's on activation specific to internet banking channel, it's on particular aspects of internet banking as to what all customers can do. Not only that, it's also on the ATM, CDM channels. So we are getting more and more customers on those channels, not only by the existing features, but we are also offering new features on these channels. During this period, we offered a number of those. Especially, I can mention on the enhanced transaction limits, and that's very unique to Brac Bank. Actually, we initiated regulatory talks to increase transaction limits so that customer can feel that freedom, and it's really liberating now that they can do everything from the comfort of their home. Nazmur touched a little while ago that our numbers have grown significantly both on these alternate channels. We will continue this initiative. Next slide, please. So this is a very interesting slide. The transaction shift we are going to demonstrate in here. It actually depicts our focus on migration from analog to digital. Very simple slide. In here, significantly, I have two towers. One, this deep blue color, which is actually manual transactions. As you see, it is always high. But on the bottom, you see the light blue color, it's growing. And the growth is significant, as you can see. So at the beginning of the year, we had 23% transactions digital by volume. Now in September, it is 37%. And until such time when we measured it, we also could not believe that it has such a propensity to grow. Now that we believe it will well pass, say 40% by the end of this year, and the journey will take us quite far, I'm sure you'll see. Now, the lines that you see are the transaction numbers, the total transaction numbers through these alternate channels. Alternate channel, we mean anything other than manual. It can be ATM, it can be internet banking, it can be our corporate solution through which corporate customers send digital transactions and all. At the same time, it also has all the MFAs and other wallet-related transactions. And those numbers are significantly growing because customers are finding more and more value. And we are also connecting to all the channels wherever we find value. In fact, we are the most connected bank at this point in time that we can claim, and it's only growing. You can see in June, there is a hump, and that's nothing but during the pandemic period, this MFS channel was heavily used. In excess of 3 million transactions we could cater when central bank wanted us to deliver COVID-related assistance to the vast population. So that's what we did in association with bKash. So we expect these channels will be used more and more even later this year as well. So that's what we wanted to depict here, that our focus is to grow digital transactions really, and that's really working. Thank you.
Thanks, If we can just spend a minute more on this slide, Yasir. This is something new that we're showing all our stakeholders, but it is aimed at moving transactions from what we call manual bricks and mortar analog platforms to digital and alternative platforms. Why are we doing this? The cost, firstly, of the analog platforms is 3, 4, in some cases 8 times more than the cost of doing it in alternative channels. Number one. Number two, the quality of the service itself, the overall customer experience is far superior when customers use these alternate channels. And number three, very importantly, once you move to alternate and digital channels, the controls over the entire transaction are far superior, and the overall slippage, leakage, frauds, mistakes, etc. are much lower as well. So essentially 3 important benefits for us: customer experience, reduced costs, and an improvement in controls. Thanks very much, Shabir. Shall we move on? And what we'd like to do now, Masood Rana, our Chief Financial Officer, will take us through all the financials. But as we, Masood, get into the financials, let's look at the bKash financial first. And we have, Yasir, can we move to the bKash financials? Yes.
Okay, Salim bhai, before the financials, we have the performance. Yeah.
Yes, this is the performance slide. And we'll ask Kamal Kadir and Moin, our CFO from bKash, to take us through a couple of these slides first. Thank you.
Moin,
Kamal, do you mind if I start?
no, I'll just go first on the overall
Sure.
the overall performance of the company, and then you can go with the numbers.
Yeah.
And so we'll make it short. And if you have any question, any of the participant can ask either myself or Moin any question you want. So the overall summary is that we have right now 48 million plus unique customer, and these are all verified individual customer, verified KYC. These are not MNO registration. It is purely Bangladesh Financial Intelligence Unit prescribed KYC registered customer. And the transaction volume that we have anticipated, we are on course. Same is our cash in and cash out transaction that we anticipated at this point of the year. The dip that happened from late March to mid-May, bKash recovered that very well, and we are on course of what we planned, the way the year will end. The area that we focused during 2020, besides the overall business, is our link with different banks, obviously including Brac Bank, and our focus on remittance as well as utility bill payment. And so those areas have performed very well. And of course, we are every day we increase our app adoption along with our regular customer base, and adoption of app along with opening different horizons. It also gives the scope of saving our connectivity cost with the mobile network operator. So without going any further detail, I will also tell you that the new areas that the business is growing is collection. We are doing large collection volume for different MFS operator and as well as corporate houses. And the payment area, the growth was not as spectacular as others, primarily because of the COVID impact. But since July, I would say, payment is also growing. So right now around 100 plus thousand shops are accepting bKash payment, and the other area that is getting the spectacular growth is the add money. So people are using credit card and bank accounts to bring money straight to the account rather than depending on the agent network that we have. But but I must also mention that we have perhaps one of the strongest agent network in the world. We have 250,000 retail agents across the country. There's no place in the country where within walking distance you cannot find a bKash agent network. We are becoming a market leader in utility bill payment, and that's another area that we strongly focus. So that will be my general view on bKash. And Moin, if you could go through the finance number, then I think we have covered the most that we wanted to cover. Moin, please.
Thanks. Thank you, Kamal bhai. So I've got a very brief couple of lines just to give you all an idea on how the performance has been in quarter three. Quarter three has been the best quarter for bKash so far. As you can see on the chart, we clocked in $7.5 billion, 7.5 billion takas worth of revenues, top line revenues, which over the same time last year, it's almost a 22% increase. And if you were to see it on a YTD September basis, we clocked 20.6 billion takas, which again was about a 9% increase over last year. So in terms of revenue growth, there's some very healthy growth. And just complementing what the CEO just mentioned, we did take a dip in the second quarter, at the end of the first quarter and through the second quarter, and then now we have recovered. And as I said, September has been the best quarter so far. From the revenues coming on to gross margins, we did about 2.4 or almost 2.5 billion takas worth of gross margins, which was if you compared with the same time in 2019, it was a 65% increase. And for first 9 months of 2020 and the first 9 months of 2019, that's an increase of 37 or almost 38% growth. So very healthy growth in there. And just in the same line of growth of gross margin, if you see the gross margin percentage, that the gross margin is increasing. And this just goes to say that from a single product dependency, bKash is now diversifying into many other products, and that the product mix has become healthier, and hence we see a gross margin rate of 33%. So what was 33% at the end of this quarter? At the same time last quarter it was 24%. So you see a very healthy growth there. I'm not going to talk about the customer number. The CEO just mentioned we at the end of third quarter we were at 47 million customers, which this means that we acquired 9 million customers from the beginning of 2020. Yeah, so that was really in brief on a very high level performance of bKash.
Thank you, Moin bhai. We have another slide on bKash, mainly the numbers till PAT. Do you want to cover something from this slide?
Okay, I'll basically I'm not going to talk about revenues. I just talked about it. Gross profit, as just mentioned. If you see the gross profit number, the 439 remains flat. Interest income declined. This interest income that you see is essentially the interest income from bKash's own capital. That has declined for really two reasons. The effective interest rates has come down, as all of us would know, and that there's been, as bKash continues the investments both in technology and in marketing, the cash balance is declining. The operating expenses from last year this year has marginally gone down, but this is there has been some last year's provision that we reversed. That's why it's gone down. So really and you can see at operating profit levels we were down. The losses increased by 9 million takas. So yeah, that's really.
Yeah. Shall we actually listen to some of the questions we have, Yasir, in relation to bKash?
Yes, Salim bhai, we have a number of questions we received from our overseas investors as well as through our Facebook and our question answer channel.
I
So
think it'll
first of
be
all,
good to bring them up right now.
Yes, please.
yeah, okay. So the first question is about um, the interoperability regulation. That's is there any impact in terms of positive or negative to Bikash?
The interoperable, the idea that central bank was suggesting it through NPSB, and because as a compliant organization, when central bank proposed this thing, we welcome the idea, and as a market leader, we think it's good for the country. However, central bank also postponed the launching of it on the day of its inauguration. So we leave where the facts are, and the fact is it is not operational right now.
Okay, thank you, Kamal bhai. As another question is that your gross margin have improved. So tell us something about the drivers behind this improvement.
So, well, I'll give you briefly, and Moin can elaborate further if there's a if my answers are not sufficient. We are focusing on as Moin was mentioning, on diversifying the products. Okay, we were on primarily on as a in a country where this is the first time a digital payment, digital the kind of customer base we initially focused are the only use case they had was fund transfer, but around 84% of our revenue now has moved to fund transfer, but the remaining 16% is into other activities, namely payment and also collection. And so that has improved our gross margin. Also, because we are not spending, we are spending significantly less on sharing our cash revenue, our cash out revenue with the channel. Also, the use of app has reduced our utility, our MNO bills significantly. So that is also has contributed, and that trend will continue. And I think in next 5 years you will see more diversifying products coming, and more product that has bigger margin for the company. And I think we started our base with unbanked customer, but increasingly you see that lots of bank customers also using our portfolio, the services that we offer, and that has increased the profitability, because this new segment of customers are more prone to use the system for other services besides cash out. Moin, if you want to add anything, you can. I would limit myself here.
No, Kalma, you've covered everything. The gist of the matter is that as we move away from the typical cash out, the margin will get higher, and that is what is exactly happening.
Thanks. We move to the next question, Yasir.
Yeah. Next question is that how fast our in-store merchant payment are growing, and how the service is doing. I think some of the part is already covered by Kamal bhai. So if you want to elaborate further.
I think if you look at things like we have merchants, if there are many ways of seeing merchants. I mean, besides the shops, we have integrated with Uber, and that is that's I mean, we think there's a tremendous growth opportunity that we have in Bangladesh for that. We mentioned about utility bill payment. I think we hope there is a bigger e-commerce platforms emerge in the country. All the e-commerce platform that we have, we are integrated with them, but not all the work can be done by us. We also, this kind of things others need to come into the space. So any e-commerce platform or offline platform that is accepting our solutions, we will be very much eager to work with them. But the reason I mentioned about Uber, because that is a different kind of merchant, and we also resolve that challenge of integrating with an international merchant like Uber.
Thank you, Kamal bhai. Next question is very interesting from one of our overseas investor. Is that how does the Ernst Financials IPO seizing, and is there any regulatory scrutiny you expect in your credit business in bKash?
Well, I do not have any meaningful information than what I read on the newspaper about Ants IPO postponing. We don't anticipate any review, because everything that we are doing currently is fully regulated, and our regulators have approved what we are offering, and it's within the we are basically the channel, and the lending pilot that we are currently doing, it's a product of a bank, and the bank has taken due permission from central bank.
Okay, thank you. It's a supplementary question. Is that you have integrated with one of the bank in terms of credit lending? So do you have any plan to further extend with the other banks in coming?
So it's one bank has sought approval from central bank, and as other banks seek similar approval and use us as a channel, we remain open to that. And however, it will be a good opportunity for us to learn from the bank that we're doing this pilot. And I think after the pilot is done, I think sufficient knowledge will be there for further expansion.
Okay, so far we have gone through all the question except one. Is that someone actually curious to know about the one of the competitor Nogod's regulation? Is there any changes, and you see the impact on market share of bKash?
Well, because bKash is regulated by central bank, we only get to see the operators who are reporting to central bank. And because Nogod's data, as far as we know, I mean, I saw the most prominent Bangladeshi newspaper, Prothom Alo's report even yesterday, that data they published, Nogod's data was not included because it's not included into the monthly report central bank provides. So we don't have much knowledge about their data. But they're in the market. Because as a pioneering service, we built the agent network and many other services, and we expect that it's very natural that others will be coming in the market gradually, and because we never kept our agent network exclusive, we felt it is our responsibility to and being part of having a social uplifting agenda in our mind from the very beginning. We thought it is important that the agent network should be open, and anybody should be able to use that agent network for expansion of their business. So our agent network is available for others to use, and even though they're all trained and the network was built by us, it's completely all right to us that others should be using that, and that's what's happening, and we welcome that very much. But we always emphasize the importance of rules and regulation, and central bank is very engaged, and we like to see all the operators who are providing service in this space are under the surveillance of a common regulation, and that's the way we operate, and that's the kind of guidance we as a management has been receiving from our board, and we oblige to that.
Okay, thank you, Kamal bhai. There's a common question in each and every earnings disclosure program is about the number of the indicators in terms of, you already mentioned the number of customer, the merchant, the agent points. Some of the area they want to know about the current market share, and is there any the aspiration to increase the market share? And
We are. I understand. I'm sorry. Please you finish first.
and vis-a-vis, you see the transaction volume and how is compared to last year. So as is in published.
Yeah. So we are a lead market player in this space. We don't. We do not. We only know our transaction number, which we share with you. It's difficult for us to really say what is the market share we have, but I would say we are the leader in the space, and as a lead market player, we operate as responsibly as possible, and something that my board directs, and I personally, along with my management, believes is providing absolute compliant service. And that's what I want to emphasize again, that if there's one thing we focus on the quality of the service and the long-term value of providing a very compliant service. And the reason it's very critical, because our service is not like a bank's operation where we have field operation, we have field monitoring. So those things we emphasize very much, and as an entity regulated by central bank, we get our regular inspection from central bank, and so far it seems we are on the right track.
Thank you, Kamal bhai. So these are the questions so far regarding bKash. So Salim bhai.
Thanks very much, Kamal and Moin. What we'll do now is move into the financial discussion that we had planned earlier, and we'll ask our Chief Financial Officer, Mr. Masood Rana, to start there.
So then I have a quick question to Brac Bank MD, Salim bhai.
Please, go ahead.
Moin and I leave the meeting at this point.
I think that's over. As far as bKash is concerned, we've given all our stakeholders, analysts, a chance to speak, put questions to Kamal and Moin, and they've also taken us through most of the numbers. So we'll try to, if we have any questions later on, please feel free to send them directly to me. We'll try to answer as much as possible today, and we'll also get responses back from Moin and Kamal later on. Thanks very much, Moin and Kamal.
Thank you.
Take care. Shall we move, Yasir, to the financials, and Masood Rana can begin?
Yeah, thank you, Salim bhai. Good evening and assalamu alaikum to everybody. I think you have heard our colleagues who has actually, given all our customer segments, and also Treasury has spoken. Well, it really indicates that, and it's also because CFO was mentioning that Q3 has been a better quarter. Of course, I think across the industry, across the bank, this is true. Since the lockdown opening up, things has been going to the normalcy. Particularly, business are opening up, settling down. So therefore, the Q3 was kind of a normal to most of the businesses. So as a result, you'd see it's pretty much better in all the business enterprises. However, if we look at our business, Yasir, stick to that financials. Yes. If we look at our total revenue, this is year-to-date numbers. This is solo, of course, standalone banks numbers. So we are actually 5% behind than last year. Understandably, we lost almost the Q2. 2 months virtually there was nothing was happening. So since Q1 was of course better, so altogether we are only 5% behind. I'd say it's a pretty much pretty good numbers in terms of overall, and I believe this is not comparable at all in any sense. Anyway, but for the sake of comparison, if you see, we are 5% behind. But let me tell you one thing, that the business, we could see how it has actually rebounded. From last year Q3 to this year Q3, it's about 6 crore higher, which is 60 million higher. But if we consider the Q2 220 versus Q3 220, our revenue grown by about 1.34 billion, 134 crore. So that tells you that what has happened during this period. Okay, so if we look at the profit after tax, I'll come with the detail later on. So we could see we are year on year about 20%, 25% behind. If you could recall, our H1 numbers was around 40% behind year on year. So we are actually minimizing the gap. So there are a number of things that has helped us to pull that up. So I'll come to that. As we have seen, Salim Bhai has taken you through the deposits and loan. Deposit is a good story for us. Loan has, for this year, it's pretty much flat. Part of it is consciously we have not grown. Like retail, we have only started growing from this month, and SME from July onwards. So altogether, it is pretty much flat in a sense. And thanks to the moratorium, otherwise it would have been different. So if we look at the major metric, let me start with the ROE. Year on year, I mean quarter on quarter, when we discussed H1, our return on equity was around 8%, 7.7%. So that has improved because of the the numbers and the bottom line. Similarly, ROE has improved about, let's say, approximately 18 basis points. So of course, it has an impact on the EPS. But if we look at the most important message here is that Npl coverage. Our Npl coverage has grown to 151%. Of course, there are some forbearance, some restrictive regulation at this point in time, but we actually had a kind of a deep look of how we should go about it. So we have taken cue from the surrounding economies and also what is internationally being practiced. So bottom line is actually we have taken a in terms of LI provisioning, we have taken a conservative view and taken as Joy was mentioning, it is about 1.5 times, more than 1.5 times of last 4 years average. So we thought this would actually help us, but at the same time, we were conscious also about that. We should not, do something which is actually also, impact our business. So it's a balancing. But I believe what we have done is more prudent and has been appreciated by our investors all across. The CRA has actually improved from half one. It's, as we speak, it is 60% year to date, but it was 75% almost when we last discussed with the numbers with you. In terms of the capital Rdpc ratio, it is slightly deteriorated, not much though. It's more mainly driven by the excess liquidity because our deposit book has been grown, and we have parked this in our different kind of investment, mostly the government securities, bond and securities. The general market freeze, the portion of it actually driving our this RW and thereby the capital Rdpc. NAV has increased, of course, and the spread is year to date because of the higher spread in the first quarter, actually contributing, but marginal spread, as we showed, is around 4.12%. Yes, next slide.
Just a second, Masood. This is Salim again. Just to quickly give you a sense of what I make from this performance. One, revenue, despite the pandemic and March, April, most of March, April, May, June being completely closed, the overall economy only started opening up in June. Taking that into account, plus the 9% lending cap interest on all loans, taking all that into account, a 5% reduction in revenue, I think, is a very, very good outcome. Number two, deposits, as Masood Rana said, I think an absolutely fantastic performance. Not only the growth in deposits, but the fact that the quality of that growth in terms of CASA, in terms of the reduced cost of deposits, that has been fantastic. Loan growth, predictably and very naturally, very subdued, very conservative, but very much aligned to our overall de-risking plans. If you look at cost to income ratio, our focus is really to improve these metrics, our return on equity, our return on asset, our cost income ratio, and all of these you'll see are going to improve now quarter by quarter. I know lots of people ask me, how much are we worried about the 9% lending rate cap? And I can tell you that while that is a major challenge, the fact that we've been able to improve our cost of deposits means that we have much more space now than we did earlier. And currently, our cost, our NIM is a little over 4%. We expect by the end of this year for that to continue to improve. Capital adequacy ratio still very, very positive. Npl coverage, as Masud Rana said, and Joy before him, our head of credit risk management, is really a reflection of the very conservative strategy by both management and the board. This is roughly 1.5 times the average cost of credit that we've taken over the last 4 years. And much of this is actually general in nature rather than being specific. You may recall that local regulations actually do not require us to take any kind of specific provision in 2020. And yet, the bank has taken a very large amount of provisions in June and again in September. And there is absolutely no release of debt provision anywhere in the bank over the last 9 months. And that compares, I think, quite favorably with many other banks. Sorry for that, Masood. I thought I'd just interrupt to highlight a few important statements. Thank you. Can we move to the next slide, Yasir?
Next slide, please. So at a consolidated performance, if you look, both of the 5 become 3, and PAT become from 25 to 23. It means our subsidiaries are actually now contributing. So thanks to the overall economic conditions since post the lockdown period, most of if Yasir, if we go back, go to the next slide where our subsidiaries details are there.
Yes, yeah.
If you look at that. The 4 subsidiaries we have, if we take the first 3, everyone has contributed to this year-to-date, profitability. So thanks to the overall condition, particularly the investment and brokerage, who has come into a profitability. But as we just have, listened to the bKash management, so bKash is also, investing heavily, as we understand. So and naturally the part of it, the negative line, the part of it. But net, I'd say things are turning to a good, trajectory. So as bKash would improve its profitability, we'd see much better traction or better, support from our subsidiaries going forward. So, Yasir, next slide, please. This is the financials. As I like to, particularly the Salim Bhai has also mentioned, one of the greatest, the best achievement I would say is the management of our cost of liquidity, cost of the deposit, and also the borrowing. Overall, what we have managed is significantly, also there was, support from the market liquidity, etc., etc. But we have managed it very, very, diligently. Our cost of deposit has actually helped us to produce this net interest income. And though we all know that there has been an interest rate cap, but it has only gone down by 26%. Otherwise, it would have been much, much larger. But the most interesting success in the Q3 has been particularly our NFI line, particularly in investment income. The excess liquidity, as I was mentioning, was part in government bond and securities and other instruments, where we have taken that interest income also. Particularly these rates, the rates is rock bottom almost, and therefore, and since we have been strategizing this for a long time, this is the best time for us to take the kind of realization benefit, and which we did. We'd see a large number of end-to-end gains, actual realization gain, and others actually hitting us. It's about at 48% year on year, so understandably higher, and that has helped us. Having said that, I think in terms of the business, as I said, only SME was growing. Other than corporate and retail was on kind of hold. So therefore, you'd say NI has been more or less stable in terms of the given this regulated interest regime, but the NFI has helped us to grow our year Q3 particularly. That's revenue. I mean, if we look at the total expenditure, we have grown about year on year 6%. But before dissecting it further, I'd just like to mention of this 6%, almost half of it is kind of an extraordinary expense, particularly for this COVID-19. So had it not been there, it would have been only 3%. Now, if you look at, of course, the staff cost is driving this cost. As you can, recall, we have been investing in our many verticals, the new headcounts, new business lines, etc., etc. We had actually onboarded a number of resources in a couple of years, particularly in 19. So, and that was, onboarded on different timing. So we have been taking the full, blow this year overall. One thing to be noticed here that we have not taken any, initiative against any, because 2 months our Salesforce, food soldiers, everybody was, grounded. They were waiting, but we actually maintained everything as usual. So that had a cost, and board was, very, I would say diligent in terms of, looking at our staffs, how they have been, treated, how we are taking actions, etc. So therefore, we actually, there is no action from the board or the management in terms of the staff cost. There have been, as usual, cost of living adjustment, which actually we did in the early of the month. So therefore, the staff cost increment was kind of unavoidable. So, but if you look at in our, underlying monthly cost, if I may tell you, we have actually managed it about 11% year on year. So we have reduced about 11% of our underlying cost. So, and most of it coming from the other operating expenses. So that's actually real good story in terms of, this is, that we could not do alone by the senior management. Every one of the bank has actually contributed here. And we knew we had to do it because of this. This is a pretty large organization, and we have a big cost base. So, and I'd say we have managed our costs pretty well, and we have several other plans that we will roll out in next phases that would also actually give us better, cost efficiency going forward. And the debt chart that we, as we discussed, it's we have taken a kind of a huge in terms of if I compare it with our existing regulation, it's definitely much higher than what is expected. But we think this is actually will have overall, the business going forward. And also, if you look at our tax effective tax rate was also improved because of the kind of capital gain and etc. that we had in our top line. So net though we are behind by 25%, but as Salim Bhai also said, I'd like to say we are actually going better, and particularly Q3 has been very well, and you'd see much improved performance going forward. Next slide, please. Yes. So this is consolidated, more or less. If you look at, not much to add here. So the contribution of the subsidiaries, and we hope to see the particularly the capital market related to subsidiaries doing well and keep on doing that. And if Bikash can also go as they are doing in last quarter, So it will be much fatter bottom line you can expect in the next quarters, I would say. Over to you, Salim.
Very much, Masood. If we look at the outlook for the next few months, and we'll get into question and answers very shortly. So, Shaheen, can you take us through the environment?
Sure. Thank you, Senator. I think our country's fundamental is really positive, and all the macro fundamentals is really strong. Like if you see the balance of payment, FX reserve, and also debt to GDP, all the indicators are really strong, and country has ample space in each and every direction. So that's a positive for the economy, and also that this is why we have taken an expansionary monetary policy, and we have opted for a lower interest rate regime than we had been previously. So this is also being supported by lower inflation, and inflation has been under control for the last few years. And I think inflation would not be a big challenge as the agriculture sector is really performing very well in the country. And also, like there are various regulatory changes, supports that we are seeing. So regulators are very fast and very active in terms of offering various regulatory changes. So this is also supporting the market very well. Even though we see the lending rate cap is going to continue for the foreseeable future, but with the lower interest rate expenditure or the lower rate environment, I think banks would be finding it quite easy to operate within this band as the cost has come down significantly. And also, like government and Bangladesh Bank stimulus package is really supporting the business and the banks as well through refinance. So the overall environment is quite conducive to have a faster recovery. I think that's the environment from my side.
So, what is going to be the bank business strategy going into the next 3 months and perhaps beyond that? Firstly, as I said earlier, our SME business has begun and opened up from July onwards. It is doing very well. Momentum is very, very strong. We just plan to continue to grow that. 1. 2, we've just started opening up the retail asset base as well. That business will also start growing, and we expect that by the end of the year, we will achieve the momentums of that we experienced end of last year or early this year as well. The corporate and commercial asset business is again going to be different in the sense that there our focus will be to continue to de-risk and manage the portfolio better. Does that mean that there will not be any new assets? Of course there will be, but on a very selective and a more qualitative basis as well. Very importantly, we are investing an enormous amount of time, effort, and money in converting our bank from the earlier traditional bricks and mortar platform to a more digital and alternate banking platform. Our Chief Operating Officer spoke to you about that, showed you some slides. We showed you a little bit of what our alternate banking channel head is also doing. So a lot of work is happening in those areas, and that will continue. How does it impact our business? It will improve customer experience, the overall user interface. It will reduce our cost base. It will give us the opportunity to expand our reach, expand our access to small towns and villages and customer segments where we are not there right now. So that is a very important part of what we are doing as a bank, moving from where we were, the platform that we had earlier, which we call analog, towards a more digital platform. All of that work is continuing. A certain amount of it has been slowed down very naturally. A lot of our fintech partners are having to work with us virtually instead of whereas in the past They were able to send many engineers to Dhaka to sit and work with us side by side. We've had to change work practices both within the bank in Dhaka and in our dealings with many of these fintech partners overseas as well. But certainly from the first quarter of next year, you will start seeing how many of our digital initiatives will be rolled out. And these are aimed at, in terms of financials, at reducing our cost income ratio, at improving asset yields, and also improving our ROE for the whole bank as well. So that in a nutshell is what our plans are over the next 3 months. The message is the bank is actually in a much stronger position today than it was in January or February. Our ability to work in a different way, in other words, to work digitally, virtually, is something that we did not believe we had back in January or February. So we have been able to prove that we as an institution are very agile, can adapt to different kinds of changes in the environment. And as our costs show you, Masood Rana, our CFO, showed you, our cost base gives you a sense how we've managed to bring down our overall costs. So that exercise, the reduction of costs across the bank, will also continue. Overall, we're very happy at where we are. I can also assure you that the bank will continue to be very, very careful, very conservative with regard to debt provisioning. Our governance standards are easily the highest in this country, and our board continually want us to ensure that not only the bank's capital, the bank's debt provisions are aligned with international standards. That's the 30, 60, 90 day standards that our head of credit risk management referred to earlier. So that essentially is it from us. We now open a question and answer segment where we'll try to answer any questions that are thrown at us. Yasir Arafin, what is the first question?
Thank you, Salim Bhai. Before moving to the Brac Bank's question, verification question on bKash is regarding, they're asking that the gross margin number in two different slides is different. And actually, I don't know whether Moin Bhai is here. So if you allow, I can explain it.
No, Moin isn't here. Can you explain it?
Yeah. You see the gross margin number is different because the first slide, the 53 slide is based on the management reporting, and the 54 is based on the financial reporting. The impact is actually, we also elaborated in our earlier quarterly calls, and we also got a question on it, is that the impact of IFRS 15. So you see the commercial expenses under the expense line, that is net positive versus last year, but actually the number is not positive. That has been netting off with the gross margin number. So the supplementary question that also asked is that what is the impact of cashback? So that is the real cashback impact. You see the gross margin here is 0. However, in the earlier slide, that is about 37.5%. So that is for the clarification. Okay, so moving on, Brac Bank's question answer session. Number of questions on lending rate cap. Actually, the questioner want to understand actually what will be the situation in the coming days.
So essentially, we are working on the assumption that these lending rate caps will remain for the foreseeable future. If there is any relaxation, we expect it to happen in cottage, micro, small, and perhaps retail, but we do not anticipate or expect any relaxation over the next, say, year or so. So essentially what we're saying is that the economy needs to normalize. All effects of the pandemic have to sort of be washed away, because before the central bank will be in a position to even consider any kind of relaxation in these lending rates. But what we are trying to do is work within these lending rates and find ways to improve our spreads. So you will see that the spreads have already improved to over 4%. And we expect over the next 6 months or so to continue to push this by improving asset yields, number one, and number two, by continuing to improve our CASA mix and our cost of deposits. So the expectation from Brac Bank at this point in time is that over the next 6 months or 1 year, that spread is only going to increase further. So to be perfectly honest, we're not too worried with that interest rate cap at the moment. As a bank, I think if we can operate within a 5% spread, that will be quite good. If that can be increased in the future because of any relaxation in terms of the regulations, that would be creme de la creme.
Okay, Salim bhai, there's a supplementary question on lending rate cap that is mainly on SME side. That is there any plan for the government to relook on it because we are talking on it? Subsequently, is there it will impact the SME loan growth in Bangladesh as well?
May impact the whole industry. That is a different question. As far as Brac Bank is concerned, it will not impact our focus in this area. As our head of SME, Tomal, has been saying, we will continue to grow our business in this area. Our focus is on ensuring that our yields are improved further, customer deposits are brought down further, so the spread is improved, and at the same time that the processes underpinning this business, the lending business, are improved through digitalization, through business process reengineering, etc., etc. So yes, it may impact the entire industry differently, but it will not be negatively impacting Brac Bank or changing any of our strategy or focus in this key area, what we call cottage, micro, small, and medium enterprises.
Thank you, Salmai. Next question is about what is the actually client repayment characteristics? How is improved? You see the collection recovery process.
It has improved quite significantly from June to September, and in fact from September to November, the first week of November. I can't show you exact figures, but we are certainly seeing improvements both in retail and SME in particular. So a lot of customers have already moved out of moratoriums, although the moratorium is available to all three client segments right up to December. As far as retail and SME are concerned, moratoriums, the overall behavior of clients with regard to moratoriums has improved. So we're very gung-ho about that.
Okay, next question is about, I think Tomal bhai has shown as the very first slide, but the question is about, do you have any quantitative assessment on Brac Bank's SME portfolio due to COVID-19 breakout? And if yes, will you share the outcome and future initiatives to address those impacts?
So let me start off by giving a little bit of preamble to that. You would have seen that we have begun a number of monthly surveys of this business, particularly the cottage, micro, small business, which is almost 70%, 75% of our entire SME portfolio. And that has given us the wherewithal to progress or accelerate the lending base. So that has worked out very well. Our experience, as I have said, and I said this many months ago as well, we're not worried about debt provisioning requirements or portfolio stress in CMS at all. We know this business, we know the clients, our teams are able to manage these relationships very well. We are able to collect and recover well too. So we have never been worried about SME at all. And the experience over the last 4 months reflects what we thought back in May and June is very, very correct. Would you like to add to that, Tomal?
Yes, Salim bhai. Actually, you see, if you see the survey results, that we were a bit worried at the beginning, when the lockdown started. But later on, we have continued the survey purposefully to understand the changes of the SMEs. And everything has gone really positive when our government have opened up from May. So the numbers and also the businesses have came back on track because of that opening, because it took the SMEs a while once they're opening up, because opening up didn't happen overnight. It took a month or month and a half for everything to slowly open up and the entire supply chain and the ecosystem to get started. So we are pretty confident, as you have seen in the survey results also in my slide, that things have come up pretty well and shops are opened. And so we are not worried, because the customers, they are also very aware, our SME customers, because the government have never said that there will be a moratorium on the interest. So when the business is running, they don't want to remain under moratorium, because they don't want to pay extra interest. Because so what we expect, a large number of customers will come out of moratorium and they will start paying. Another thing I would like to add, like during the lockdown also, like since and when things started opening up from May onwards, part of our customer have also requested for repeat financing when their business have started. And these customers, when they took the repeat financing, then they were not under moratorium, and they kept on paying actually since May, quite almost 10 to 15% customers. And what we anticipate by end of October, we anticipate that almost 70% of our customers will come out of moratorium. And by year end, it will be there will be at like 5% customer remaining under moratorium. And our collections are pretty strong, and we don't anticipate, at least in the small business portfolio, which is almost 80%, we don't anticipate any much deterioration in 2021. Thank you.
Thanks. Yasin, next question, please.
Okay, so next question is on the treasury side, and that you have a significant investment income. So what is your outlook in Q4 and 2021?
Depend on the yield movement and the realization of the investment income as well. So we really can certainly tell anything about that one, but you can see the kind of investment that we have, and with the yield, how much gain or how much profit we can book in the coming quarters as well.
Okay. Thank you, Shahin Bhai. Next question is on corporate side. So what will be your major focus on last quarter trade finance operations?
Our major focus, particularly remain in the RMG and particularly in the textile side, because in the market, if you consider the market, around commendable size of share is holding by this particular segment. So, and all this, we are also focusing on import side. Those who are importing bulk quantity of commodities, we are focusing on that part, and we're also exploring some new avenues, in particular in the public side, which definitely will give us some boost in our trade portfolio in the coming year, definitely.
Okay, thank you. Another question is an interesting one, is that do you have any strategy to take advantage of the lending rate cap?
Yes. Let me tell you what will happen with these kind of lending rate restrictions. While many of you may believe that they are stressing, say, an institution such as Brac Bank, they are actually stressing the rest of the industry far, far more. Because we, as you can see, are able to change our model. We are much more agile, responsive, able to invest in technology, in business process reengineering, and find ways to improve, continue to improve our spreads. That may not be the case with everybody. So in that sense, we believe that this is actually an opportunity, just as the entire pandemic itself has proven itself to be an opportunity for us to flower and spread our capabilities and engage with customers much more than many competitors have, which is why I keep on emphasizing that Brac Bank today is in a much stronger position vis-a-vis the market, our customers, our stakeholders than we were in the first quarter of 2020.
Okay. So another question is that in the yield side, we found that the yield is 8%. However, the rate cap is 9%. Why that is lower? And the subsequent question is there any plan to improve it?
Yes, obviously and that is really a function of the fact that not every lending product in the bank is at 9%. Firstly, if you look at our wholesale banking prime lending rate now, it is actually no more than 6 or 7%. So lending to top corporate clients is not at 9%, it's well below 9. It's no more than 7% really. Number one. Number two, we have many products where even in SME, for example, because of central bank refinance and other arrangements, the lending rate is much lower. Then, of course, there are different products in the corporate banking division, such as our trade-related and other refinancing, such as,
Right.
Would you like to talk a little bit about ETF and all?
A large portion of our portfolio is comprised in EDF, Export Development Fund, LTF, different sort of refinancing product we are using from Bangladesh Bank. So that actually, putting down the total yield curve. It's not that we are making, we don't make any margin from there.
Yes.
Corporate banking margin is much more better than the earlier one, I think, peak of the situation.
Yes. So as our retail and SME books are accelerated, you will see that top line or the yield on assets start moving from 8% towards 9%. As the composition of the portfolio, as cottage micro small grows, as retail grows, that 8% will start heading north towards 9%. So as far as the spreads are concerned, we are pretty positive, much more so than we were 5 or 6 months ago.
Okay, now the question is on the retail side. What will be the impact of the company on the interest rate cap on the credit card?
Yes, the credit card lending rate has also been reduced to 20%, and we'll ask our head of the retail banking division, Mahul Islam, to talk about that. Mahi?
Yes, so from last month, the Bangladesh Bank, our regulator, has reduced the interest rate from which is was around 26 to 27%. It has been capped at 20%. So since Brac Bank, we have one of the largest credit card portfolios. Obviously, we have been impacted. However, we have taken various measures that we have already started. The initiatives in earlier this year in terms of cost optimization as well as certain areas where we can ramp up the revenue. So those measures we hope with that measures that, and also with the new acquisitions gaining its momentum, we are confident that we will get back on the overall expected margins or expected revenue. So we have taken various initiatives to tackle that. Thank you.
Okay. The specific question actually, Mahiba, was actually what is the total impact on the revenue of this?
Annualized for Brac Bank, the impact on revenue is around BDT 18 to 20 crores. So that is the impact that we have had for the 7% drop in the credit card interest rate.
So just to add, actually, I think the impact on the total revenue is less than 0.5%. So to be precise, on the total revenue side.
Yes, that is on total.
The interest rate on credit card is much lower than that.
Yeah, it's only 2.5% of our total portfolio, so that's why the impact is pretty low. Okay, so moving to the next question is that what is your strategy on your ongoing CASA? As you see, we see that this is coming down. So
Yeah, it's pretty simple. That strategy is something that we've been rolling out for more than 2 years now. That focus on improving the mix, number one. And you can see how the mix has moved from, I think, 41% at the start of the year to about 50% already. So that is a significant improvement by itself. That, secondly, by focusing heavily on growing retail deposits, more granular, less interest rate sensitive deposits. Thirdly, by growing our transaction banking deposit base in the corporate bank and exiting high cost corporate and commercial term deposits. Fourthly, by growing the SME deposit business, which is growing very well, as you saw in the last 3 or 4 months as well. So that's a four-pronged attack in terms of the deposit base.
okay, moving on, the last part, I think that is the portfolio quality, and the question is that actually when these the moratorium and our forbearance actually will not be in place. So when you what you'll see your NPL numbers and the portfolio quality.
Firstly, I would have to be a magician to be able to make a definitive statement or a projection like that. It is not possible for anybody to do that. However, one must recognize that just because customers are availing of moratoriums does not necessarily mean that they are stressed or that they will not be repaying in the future. So, this is an environment where, because of various external government support, and this is not true of just Bangladesh, but many countries globally, customers may want to pay out later. This is a good moment to keep cash in your pocket or in your bank account and wait and see how different government stimulus packages, etc., work out. In many countries of the world, we have seen interest waivers. We have not seen such interest waivers in Bangladesh. We saw it for a couple of months in a little portion. I think 1% was supported by the government, but that was only for April and May, really. So other than that, the government of Bangladesh or the central bank has not provided any interest waivers to clients. Subsidies of different kinds, yes. But what is going to happen in the first quarter of 21, it's very difficult for us to say, which is why we are closely monitoring all our customers, engaging with them very well, which is why we are continuing to take very conservative debt provisioning. But on the whole, I will stick my neck out and make the statement that I believe our debt provisioning is more than adequate to cover the kind of stress that our customers, either corporate, retail, or SME, will experience over the next 6 to 9 months as well. And this is also based on the fact that the Bangladesh economy and society in general have normalized very, very quickly.
Okay, Selma, as a supplementary question is then, do you believe the loan provision level is adequate and you are saying any segment stressed?
Yes, I personally believe that our SME segment will move out of any kind of stress very, very quickly. We may see a certain rescheduling or restructuring need in retail and in corporate commercial businesses, but we will better understand that going forward. Actually, even my worries or concerns about retail have to an extent been alleviated already, because we've seen a large number of customers move out of loan moratoriums. Mahi, would you like to expand on that?
Yes, as I mentioned in my presentation, is that on the third phase, we are seeing that only 5% which was earlier more than 50% level of retail customers who had opted for moratorium, have reduced significantly. So now it's only 5%. So the trend is that people would not want to stay in the moratorium rather, and also accrue the interest, which means that, obviously when the deferred EMI comes, so there would be the EMI amounts would be higher. So they fully understand that, the customers are knowledgeable, and that is why they have already seen the first two phases. On the third phase, they are now more confident and they understand that the burden needs to be paid. So they have lot less opted for the moratorium. So that's a very good trend that we have observed for the retail customers.
Okay, we are very end of our questions session, so only two questions to left. Firstly, the priorities of 2021, and secondly is that it sounds like that in 2021 we should back to 15% asset growth, 1.5% ROA, and you see, so is it the 2022 is a safer to reach?
Sorry, are you referring to 21 or?
One question is on the priorities of 2021, and the second question is that actually the financial indicators in terms of ROA that will see that 1.5% in 21 or 22. So these types of question, including the asset growth aspiration.
As far as SME and retail are concerned, our plan is to accelerate asset growth and take them to highest possible levels. Number one. Number two, the plan is to continue to improve the underlying channels, processes that underpin these lending businesses in retail and SME. So a lot of work is going on there too. That will continue. In terms of corporate, continue to de-risk the portfolio, move away from lending only, slightly risky businesses, continue to expand our transaction business, trade, FX, cash management. So that is going to be the focus in corporate. Now, it is not possible for me to today refer to a number such as the number you just said, 15%. But I would expect us to have a pretty normal 21. The only shadow is whether there will be a second wave in Europe and America, how that will impact our corporate wholesale banking businesses in terms of the ready-made garment textile businesses. The only shadow is whether there will be any spillover from the loan moratorium in some of our businesses this year into next year, and how the regulators will respond to that. Will, for example, debt classification and debt provisioning in many countries, not just Bangladesh, be normalized in 21, or will they continue to continue the forbearance that we saw in 20? So much depends upon all that.
Yeah, last question. I think it's covered by Joy Bhai, but reiterate is that is the central bank moratorium is still ongoing, and what is the credit cost due to the COVID?
Yes, the central bank moratorium continues at the moment until 31st December 2020. What was the second question?
The credit cost due to
credit costs currently, Yasir, you can talk are about 1.14%. 2.14%. And I emphasize that the credit cost at a similar period over the last 4 years averaged about
78 bips.
78 bips. That's 16, 17, 18, and 19.
Yeah, it's almost 1.5 times.
1.5 times more than what it was. And I again emphasize that a very large portion of the debt provisioning that we are making is more general in nature rather than being specific, although all of it is clubbed under the head of specific debt provisions. Number two, I would like to emphasize that we have not released any debt provision at all in 2020 and do not plan to do so. If anything, this very conservative strategy will continue into the next 3 months. That is the general expectation.
Thank you. I think we have covered almost all the questions, as some are very similar in nature. That's all from my side.
Thank you very much, ladies and gentlemen, for being with us. It's almost 9:30 p.m. Here in Dhaka, Bangladesh. Thank you for joining us. If you have any questions that we've not been able to answer, please feel free to email them to myself or our finance head, Masud Rana, or our business finance head, Yasir Arafin. Thank you again. Assalamu alaikum and good night. Bye.
Thanks, everybody.
Thank you. Bye.
Thank you.